So the story so far about the big banks for sure has been that Wall Street has really kind of saved their bacon so far. So in an otherwise unremarkable quarter, they had equities at JP Morgan, Morgan Stanley, and Goldman Sachs jump 48, 47, and 27% respectively. So that's really covered up a lot of the other sins. In investment banking, for instance, people aren't really committing to deals in this uncertain trade environment. And so basically they're holding back on IPOs, they're holding back on mergers and acquisitions. So, the Wall Street side of the business, that's doing well. The consumer side of the business is also holding up pretty well because unemployment is, I think the last we checked was 4.2%. Unemployment is still very good. So the basics of the business are very good. The thing that JP Morgan CFO told me recently was basically starting April 2nd, that's obviously when things got ratcheted up. You've had consumers, fear inflation coming, and they've accelerated, they've moved up their purchases. That's actually shown up in some of the credit card data. And at the same time, we've had corporate CEOs and CFOs say, I don't understand any of what's going on right now. We're going to hold back, take it, wait and see on our big deals in the pipeline.
Hugh, in all fairness, I think a lot of us are like, we're not really sure what's going on. We're going to hold off on our big purchases, whether you're a CEO or just a regular person like me and you. I want to go back to something you hit on and dig a bit deeper on it. Headline on the Journal today says, bank trading desks are minting money from the Trump tariff chaos. I want to go back to that. And what does that say right now just about the banking sector and the opportunities there? Earlier, we were saying like a lot of the impact of the tariffs are not going to show up this quarter in the results. But why are we seeing it show up in the trading results? What's going on when it comes to this sector? Is it active management? Is it people basically trying to front run these tariffs and I guess tariff proof their portfolio? What's going on? Because we continue to say before bank earnings, we're not really going to see the impact of the tariffs in the numbers.
Yeah, so they are essentially feasting on the volatility that's being created by the regime shift. And, obviously April 2nd was when it went up to, up to 11 on a scale of 1 to 10. But there was, before that, obviously, Mexico and Canada. So once you had, a shift in sort of the worldview of a lot of, institutional investors, they had to basically trade and shift their positions in a way that was very profitable because activity, equals, revenue for a lot of these trading desks. So that was really clearly good for them.
Yeah, let's look ahead very quickly to the regional banks. We mentioned State Street, PNC, U.S. Bancorp reporting.
Yeah, for sure.
Do they have any exposure or deep exposure to commercial real estate? What are you expecting when it comes to the regionals? What kind of trends are you expecting when they report?
Yeah, Frank, so CRE is basically held up. If you look at M&T Bank, which is already reported, the story for the regionals, they don't obviously have the Wall Street businesses to sort of prop up their overall operations. So they're really relying on, the nuts and bolts of basic Main Street banking and commercial lending. And that's not as good. So basically loan growth is very, very stilted. It's very slow. M&T basically said, our expectations for loan growth is almost flat for the entire year. At the same time, the entire class of regionals have had issues in terms of deposits in the post-SVB Silicon Valley Bank world, drumming up deposits. So their net interest income is under pressure. So M&T, in a nutshell, basically missed on EPS because their NII was a little bit weak. And so, as a class, regional banks, they're looking to be a little bit sus, that they have under a little bit pressure in the coming weeks. So we'll find out as the reports come in, Frank.